Let's get a move on then and take a look at what brokerages had to say about elections then. And in terms of the election verdict, when you look at CLSA's India portfolio, what they've talked about is that they've removed L&T and they've replaced it with HCL Tech. So that is what CLSA had to say about their portfolio. And when you take a look at what they're talking about, what they're saying about their preferred sectors, they have private banks, IT, insurance and commodities that make it to that list. And when you take a look at the India portfolio in terms of key commentary coming in, they've talked about how there's limited exposure that they have to Modi stocks, the likes of ONGC as well as RIL. And they're also saying that they fear derating in expensive discretionary and capex space as well. So that largely is the word coming in from CLSA. And they're also talking about how ITC remains their preferred staples name, as well as how they have doubts over the stable government and policy making styles as well as of now. And in terms of Nifty, they're talking about how Nifty remains 19x above the 18-year historical average PE as well. So that largely is the verdict coming in from CLSA. When you take a look at what Goldman Sachs had to say then, in terms of what next after elections, they're talking about how the government will be sticking to fiscal consolidation path, and they're also expecting spending reallocation towards welfare. And they are also saying that there may not be a requirement to reduce capex budgets as well. So that largely is the verdict coming in from Goldman Sachs as well. But Snehi, which are the ones that you're looking at?
Absolutely. Let's keep on going with all these notes coming in, because you have a whole host of brokerages that have come out with what next after elections. And on the same note, then you have Ridham Desai of Morgan Stanley, and he believes that the medium to long term views on the market, they do not change as of now. He also says that the realized and implied volatility will ebb going ahead, and unresolved disagreements within the NDA were not priced in by the markets, and it's unlikely that the pace of reforms will slow down, however. But the government is also unlikely to sacrifice macro stability. So that's largely what Ridham Desai of Morgan Stanley has to say. And let's also keep on going with what IIFL have to say. And this is GV Giri from IIFL. These are his views. He says that populism can cause compression of multiples, and unreasonably priced PSUs and cap goods look vulnerable as of now. He believes that it's best to avoid the defense sector. So what's next for IIFL? What are they liking? In terms of what they are liking, they remain positive on financials, utilities as well as construction proxies. They believe that the underlying fundamentals of the market are intact. Pardon me, this is a note from Axis Cap, but let's also move it back to IIFL. And what GV Giri is saying, that avoid defense, and Sun Pharma, Apollo Hospitals have been added in the large caps, and he has also removed SBI Life as well as BPCL from the portfolio. So that's largely what IIFL also has to say on what next after the elections.
Well, absolutely.
If you like this video, then like, share and subscribe to ET Now.